What's up, all you beautiful people, and welcome to another edition of Drive to Thrive. In today's video, we'll be taking a look at Lightspeed. Now, as promised, if you guys been keeping up with my short format videos, I mentioned that once we get that weekly crossover on that stochastic RSI, I'd be doing a full-length update video on Lightspeed, so here we go. Now, if you could do me a huge favor and leave me a comment and let me know if you like those kind of videos, those short format videos, if you would like me to keep on doing them, if you find some value in them, and what is the frequency you'd like me to do them at, every couple of weeks, maybe once a week. So let me know in those comments below. That'd be greatly appreciated. Now, I do still have that giveaway there to my 250th subscriber. So if you happen to be the lucky individual to cash in, let's say $100 to my 250th subscriber, and the best way for me to validate that you were indeed that person is if you could please take a snapshot before and after you subscribe and send it over to drivetothrive.info@gmail.com. But otherwise, let's go over to these charts and let's see where we are heading next. Right, so let's start off on this 4-hourly chart here, and this is where we're starting to form some bullish thesis here, and let me explain why. So what I like to use is this exponential moving average, because usually these correspond to some key support levels, some resistance levels, and just gives you a better indicator of where a nice entry and exit points are. So if you guys want to follow along, just go over to tradingview.com, click on this indicators right here, type in EMA for exponential moving average and turn this on. Now, once you have this set up, you can go over to the settings, and under input for the time frame, I use the daily time frame. The gaps are turned on, source is closed, offset is 0. Now, for the length, you can use whatever you want, but typically what I use is the 20-day, the 50-day, 100 and 200-day. So let's start off with the 20-day moving average. So as you can see on this chart, before we actually ended up breaking this 20-day here back on September 28th, it was used as support. So going back to this August 3rd, used as support, August 23rd, used as support, back here and around that June, it was used as support, a brief breakdown, but again, we kept on bouncing above it. Then once we broke down here on September 28th, we actually ended up using as resistance. So here in October and early December, used as resistance, never able to break above, and then had this gap down. Then again used it as resistance here on January 14th, February 4th, few more reactions here in the middle of February. But then in March here, we actually, on March 17th, 18th to be exact, we ended up breaking above here, and we haven't tested it from the top side. And this is what I think is happening next, especially if I zoom out of this view and you can see the stochastic RSI, how it's rotating off of this extreme overbought reading into this oversold, then it's all making sense now. So coming back in here, like I mentioned, those exponential moving averages are really nice indicators of where we are heading next and what to look out for. So let's change the time frame to 50 days, and you'll see that this one corresponds nicely with where we were just this past week, and we used it as resistance, a bounce down off of here. So this is going to be our next challenge, is this $30 support resistance level along with that exponential moving average coming down. Then my next target that I'm expecting here is this a $40 area. This is where we had lots of reactions along, and if I zoom out even further, you'll see that there was some reactions going back to October 20th, around that $40. Now, if we go over to our EMA and set the length to 100 days, you'll see that this corresponds nicely with that $41 area, $40, so expect some resistance here. And ultimately, my bold prediction for the end of the year is $55 on Lightspeed. And again, let's change this to 200 days, and you'll see that that 200-day is currently sitting right within that resistance around $54. So those are some of my short-term targets, and eventually we will end up filling this gap in. It just all depends how long it takes. It's going to be either a couple of months or it could take years, just like it did on that PayPal chart. And if you haven't seen that video, then make sure to check it out. So zooming out of this view, let's take a look at some of these other indicators. So our MACD has broken above the zero line into this bullish momentum. Our stochastic is rotating off of this overbought territory down into the oversold. On our daily chart, we are currently trying to break above the zero line, so let's see what happens next week on the MACD. And our stochastic is rotating off of this overbought territory downwards. Now on the weekly chart, like I mentioned in that short format, we ended up getting that weekly crossover, so expecting this to move all the way up to this zero line here. So looking forward to at least a couple of months of a bullish movement here. And on the stochastic here, we do have some room for this to come into this overbought territory. And on the monthly, we are practically flat on our stochastic RSI, so lots of clear skies above us, lots of room for this thing to move all the way up to that $55. Now guys, if you're enjoying this video or if you're learning something new, please consider smashing that like button. It really does help out a lot for me to get this content in front of newer audiences and build out that subscription base. So that is it for the charts. Now there isn't anything crazy happening with the institutional buying, no insider buying really, so I'll skip the whole market beats part of the videos that I usually do. So let's go over and let's take a look at some of these options and compare some different expiration days here. So starting off with our Friday, August 19th, 2022 expiration, about 146 days out, so just under 5 months. And let's use the same strike for all of these examples. So the one that I'm looking at is this $25 strike. You know, it has a really nice delta of 70 and our buy price is around $8. So that means the break even on this strike would be $25 plus 8 is $33. So if you buy this August 19th expiration option, your break even is $33, which is right around here. So basically, if a light speed between now and August 19th is about this $33, you would make some money. But looking at this December 16th, which gives you an additional 120 days till expiration, still looking at the $25 strike. This one is only $2.30 more, which means your break even on this would be $35.30, so only $2.50 more like I mentioned, but you get an additional 120 days. Now again, $35 isn't, you know, this much of an increase from the previous one. We'd be sitting somewhere around here, so I still think it's very likely for us to break out, especially with my prediction that we'll get up to this $55. And so this would be the one that makes a little bit more sense. Again, the delta is sitting around that 70s, but your theta decay compared to the other one is lower here. So this one is at 0.0196, whereas the one on August 19th, you're looking at 0.0260. Now, if you want to be even more conservative, you can look at this January 20th, so an extra a month from this December 16th, and this one is only costing you an extra $20 and you get an extra month, also lower theta decay, and your break even is again around that $35.50. So this is what I'll be looking at once we pull back to that 20-day moving average and we start seeing those buyers coming at around that $27. I'll be keeping an eye out on this $25 strike and possibly looking to get this option. Now, as always, this isn't any kind of financial advice or anything like that. This is just my opinion. This is what I'm looking at. Now, if you want to follow along, then definitely do so. But otherwise, thank you so much for all your time. Please consider subscribing and smashing that like button, and we'll see you in another video. Bye bye.